We analyze markets through our strategy framework. We track signals, not headlines or hype. Everything starts with sequencing and probability. This banking rule change sounds technical, but it may quietly reshape how balance sheets behave, and that can ripple into portfolios over time. We reviewed a Felix and Friends video on new banking rules. The claim is that regulation changes how banks value assets. Our job is to test that claim through signals. The rule focuses on bank funding and balance sheet safety. Some exposures become more expensive to hold. That changes incentives, not overnight prices. In our strategy, this is mainly liquidity plumbing. Second-order effects run through credit and funding stress. Labor data does not lead this story. Direction: funding costs may rise for certain positions. Magnitude depends on how much sits on bank balance sheets. Relationship matters more than headlines. If dealer balance sheets shrink, liquidity thins. Thinner liquidity raises volatility risk. That is how technical rules become macro-relevant. This is not an instant crash signal. It is not a guaranteed portfolio outcome. It is a probability adjustment. Regulation does change bank behavior, balance sheet costs, shape market structure. That part fits historical patterns. Large loss claims skip steps in the chain. We require confirmation across signals. One rule alone is not enough. Banks and dealers feel it first, then funding markets and spreads. Households feel it later, if at all. We monitor credit spreads and funding stress. We watch repo conditions and auctions. We adjust probabilities, not positions. This is educational analysis only. It is not financial advice. We focus on process and risk framing. Near term remains Phase 1 dominant. Medium term sees higher Phase 2 risk. Phase 3 rises only if funding stress confirms. We slightly raised plumbing risk weight. We increased attention to market structure signals. No change to labor or growth assumptions. No single narrative drives decisions. We still wait for cross-signal confirmation. Discipline stays the same. You do not need to act early. You just cannot afford to ignore signals. Background is generated via prompt 2.